Something strange happened when we turned the calendar to 2024. We kind of ran out of sellers. Sell, sell, sell. Now, before you call me an idiot when the market starts going down, let me just say I am approaching this thing retrospectively. I simply want you to understand how insanely different this market is from almost any other market I can recall. I'm talking about a total lack of analogies to anything I've ever seen. I've been prowling these canyons on Wall Street now for more than 40 years. Sure, today was a sedate session where the Dow advanced 141 points, S&P gained 0.23%, NASDAQ inched up 0.07%, really nothing going on. But keep in mind, there are so many reasons that we should be going down. The Federal Reserve ruthlessly raised interest rates, something that should have crushed the economy. Normally, we'd be knee-deep in a recession with bankruptcies all over the place. Except we got one, Rite Aid. You'd expect companies to lay off tons of workers in order to stay solvent, right? Instead, highly profitable outlets like Amazon, Meta, or Spotify just fired people to boost their earnings, and it works. Meanwhile, higher rates did nothing to slow the rising cost of housing, principal locus, by the way, of inflation besides food, which also was immune to rate hikes, but not to Costco and Walmart. Oh, and by the way, congratulations to Rich Clancy, the longtime CFO of Costco, who's been more effective holding down the costs for food for you than any central banker on earth, and he's now headed for retirement. Rich, we wish him the best of luck. In fact, housing's still up more than 35% in value since 2019, despite a doubling in mortgage rates. Now, that's not supposed to happen either. Normally, when rates go this high, you end up with a housing glut that only gets worse as the home builders are forced to cut prices in order to unload excess inventory. Well, we still got a housing shortage, though. So the Fed's rate hikes slowed the pace of inflation, but the cost of living remains much higher than it was before the pandemic, as we know from a frustrated McDonald's, which talked about prices being too high for many of its consumers. In other words, higher rates didn't bring out stock sellers, as they have every time, save for 2 short periods in the 90s. Or more likely, they may have brought out the sellers in 2022 and parts of 2023. But at this point, perhaps because the Fed's on hold with its next move to cut, the sellers have run out of ammo.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.